Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He has a warning connected to the put-call ratio. He points out the small caps are now outpacing the FAANGS, and the Canadian dollar has been surprisingly strong. Mark Leibovit from vrtrader.com gives us his view on the Dow hitting 30,000, economic recovery, market manipulation, cryptocurrencies, and what sectors he believes are hot. Chris Vermeulen from the technicaltraders.com chips in on what markets he believes are very promising and comments on the US dollar, gold, silver, Bitcoin, natural gas, and crude. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to This Week in Money, Ross.
Nice to be back with you, Jim.
Ross, small caps, they're taking a bite out of the FAANGS.
They really are. We've talked about how the FAANGS are just decided to take a bit of a breather. I was looking, since the election when everything has started to come to life, FAANGS are up about 10 or 11%, which is not bad. But, you look at the S&P, which is up 14%, and the Dow is up more than that. But the small caps are doing what they classically do probably 8 out of 10 years, where they start to show some strength in the fourth quarter of the year, and then they really come on fire. So the Russell 2000, as of this week, is up 24% in this last 4 weeks. Now, we wouldn't want to annualize that, would we? But this is just classic action, not only for just a normal seasonal year, but the fact that it's presidential election year and you expect to see this kind of action. And, you can tell when you look at the put-call ratio, puts are, put options give you the right to sell something and call options give you the right to buy it. Well, the ratio typically is between 50 and 70. And right now, that ratio is down to 35. And there's only one time that we can see that it's ever been below 35. Back in 2010, it got down to 32. And in 2003, it was at this level at 35. And it just goes to show how much enthusiasm there is in this market right now. And that's, from my point of view, that's concerning. Because when everybody starts to get on the bandwagon, you know that any loss of momentum, and there can be quite a bit of vulnerability. So we take a look at our other indicators, our sequential counts that we look for, any of my exhaustion numbers, and it looks as though we are probably, I would say, 2 to 3 weeks away from what would be an interim high. We've got these indicators that would actually kick in at appropriate times. We're just waiting for them right now. But first signs of caution are really, really out there. And don't get too caught up in all the euphoria, because once we get to Christmas or later, there could be some caution advised.
The US dollar, what's the story there?
Broke a big support line at the beginning of the week. We've got a trend line coming up for the last 9 years. It's been just sitting on that since the summer. Made a couple of attempts to rally. We got up to the 20-week moving average a couple of times, which was going to be the resistance at the 94.5 level on the index. And then this week it took out the support. Now, we look at, in terms of the bigger picture, we look at a 16-year cycle in the U.S. dollar index, and that one has a double top. 2017 and 2020 are clearly a double top as far as that cycle is concerned. And it points down for the next few years here. And then on a shorter term basis, we look at a 3-year cycle. And that one last bottom in February of 2018. So we'd expect to see a low somewhere in the first quarter of next year. And what we're watching for is that when you got two cycles that are concurrent and that both are in a downtrend here, the market tends to gain momentum in the direction of those two cycles. So having broken the support, we would expect the index to probably get down into the low 80s and maybe further than that. We'll look for some new capitulation levels when we get down there. But whatever low eventually comes into play here, as we bottom out on this 3-year cycle and then look to rally, that probably is going to be maybe a year to 14 months in length, but not have this power that we've seen in the previous cycles to the upside, because that dominant 16-year one is pointing to the downside. So I think you're going to see probably a decent second half of next year for the dollar, but not, we're not going to be just raging bulls from that perspective. We're just going to look for a decent short-term rally. Well, I shouldn't say short-term. A decent rally. It will be tradable, but not one that I think we can look at holding on for more than a year or so.
What's going on with the Canuck buck?
Canada is doing extremely well because the U.S. dollar is doing poorly, and the dollar not only is rising here, actually had a nice gap up on Friday, but it's actually outpacing the commodity indexes, whether you're looking at the broad one, the DBC, or if you're looking at the agricultural index, the DBA. It's outpacing those. And you've got crude oil trading up at $46. We haven't seen this in months and months. But looking at the Canadian dollar relative to oil, dollar's actually outpacing the oil here. So good things for Canada for now. As you know, we always look for excesses or divergences, and right now I don't see either as far as the Canadian is concerned. A really good play this last week has been in the precious metals. A week ago, we were looking at gold and silver down in the dumps right around U.S. Thanksgiving. The sequential index that we look at, when it counts up to 9 consecutive days of closing below the 1 4 days earlier, that sequential 9 count becomes potential for a reversal. And in silver and gold, they have a little idiosyncrasy that quite often they'll turn on the 7 count rather than on the 9th day. And when you get both silver and gold coinciding with those signals, and only about maybe 2/3 of them come in together, but when they do, you tend to get a really good rally. And the retracement in gold historically is 38 to 50% of the preceding decline. So in this case, having bottomed out a week ago, we were looking at the 1344 level and a little bit higher, 1844, a little bit higher for gold. And it's done that by the end of this week. The seasonal, as far as gold and silver is concerned, typically you're going to look for a December low and then some strength in the first quarter. And with silver in particular, it tends to have 2 waves of selling coming out of a November or an October-November high. We've seen the first leg down. We've got a good bounce, and we became overbought at the end of the week. So ideally, there's one more sell-off coming in silver before I think people can get excited about it for the first quarter of next year.
Ross, thank you so much for the update.
Well, there was a lot there for people, and if they're interested in any more, they can contact us on the website, chartsandmarkets.com.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at Charts by Ross. Coming up, Mark Leibovit, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Mark, welcome back to This Week in Money.
My pleasure to be here. Thank you.
Mark, do you have a special offer for our listeners?
I sure do. It's at vrtrader.com. It is 2020 half off, 2020 half off at vrtrader.com. You enter the promo code in the little spot on the order form where it asks for a promo code. So that's it, 2020 half off. Thank you.
Are the U.S. stock markets anticipating the outcome of the contested U.S. election?
It's a good question. They seem to all feel that Biden is in for sure. We don't know that, for another, anywhere, 2 to 4 weeks, I suppose. But the market, it's sort of a moot point because the market seems to want to go up regardless. It's like all this money coming in from Europe, where else you're going to put your money. We have a lot of potential spending coming on the part of the federal government, bailout program. Somebody's going to get a bailout program coming in. Company earnings seem to be increasing. There is a COVID issue, but people seem to be spending money. It's really, to hang your hat on whether it's going to be a bull or bear market depending on the result of the election is a very tough call. I'm personally a little more concerned because our cyclical models indicated potential weakness into the end of the year, possibly into early next year. So we're just taking it a day at a time. We're trading along the way. I don't have an index position. In other words, I'm not long the market. We're just playing individual sectors and trades here and see how it unfolds into the end of the year. And even gold has been disappointing a lot of investors, though it looked like it came off a little bit of a bottom. It bounced. And now starting to pull back here a little bit. So originally in our previous interview, I was talking about a possible mid-December low. Whether that low has come in or yet, we're waiting for some further confirmation. My gut feeling it probably has, but we're watching the next couple days. So a lot of uncertainty here in the markets. But, it's like if you just held the indexes and did nothing else and turned off the television and didn't care about politics or COVID or anything else, you're making money on the major indexes, which seem to be still pushing to new highs. So maybe it all comes down to, Jim, markets climbing a wall of worry, which is something Joe Granville talked about several decades ago. And that's really what this is all about. And regardless who gets in or what, money seems to want to get into the markets and find those sectors that are going to participate no matter who is ultimately in the White House. So I don't want to be cavalier about it and say just own the market and walk away and forget, because there could be, some volatility here coming up. But part of it is pretty much up in the air here. So we're just trading day to day. I would have to categorize myself as more neutral to slightly bearish, only because we're in this uncertain period, and we're going to take it from there.
It wasn't that long ago, Mark, that everybody said you were dreaming if you said the Dow would hit 30,000 points. Well, it's there now. So what's the next milestone for it?
Yeah, there's numbers like 40, 50, 60,000, all kinds of numbers I've talked about in the last couple of years. You don't know if you're going to see it in your lifetime or your grandkids' lifetime. But, it seems like if you look at the charts over the last 100 years, or more, it seems to always go up. We get our shakeouts as we saw this past March. We saw the crash in 2008 and 9. We saw 1987. We saw them all. The 2000 internet bubble, and they break them and they come back. It seems like it's inflation, or it just greed, or it's just money has to be parked somewhere, and owning part of companies' earnings and growth is more important than your political persuasion or the current economic state of the world. And money, there's always a bull market somewhere, as the expression goes, and whether it's all here in the U.S. or it starts moving overseas, as markets are going to continue to perform. And I guess you got to be a little bit optimist if you're a long-term player, because I used this expression before, and it offends some people, quote-unquote dumb money. It's like the person who does nothing, long-term investor, just keeps going into the S&P or the NASDAQ and just dollar cost averages and takes that long-term perspective, has come out pretty well. Look at this year. It looked like a wipeout in March when the market was coming down, and it just comes right back, roaring back as if it never happened. And I think it was only maybe a 10 to 14-day period where we had that real negative sell-off, and if you were on vacation or didn't look at TV, you probably wouldn't have known it happened. So it's really wild out there, and I know I've been doing this for 40 years, and there is part of your money that I guess you just put aside, you forget about it. There's another part that you trade. We do a bunch of that kind of stuff. And, you sort of, play the game that way. And of course, you don't all have to be in the stock market. You can own gold, you can own real estate, you can have your business assets. There are other places, for your money, not only the stock market, but that portion that you're in the market. I guess some of it has to be a long-term hold, and another part you trade, and that seems to be the big answer. Here at VR Trader, we tend to be more traders. I come from a floor trading background. I sort of learned to take your payroll check home every night when you were trading. So we try to do a little bit of that because we enjoy it. It's a sport. It's fun. You get to see where the action is, and you see what's going on in various sectors and so forth. And again, and we've done a pretty good job of that. We've called some pretty nice plays here. We called the solar sector. We called the infrastructure sector. We called the cannabis sector. We've done a lot of specialty analysis and trading in individual groups and stocks that have outperformed here. And I think we're doing a pretty decent job. But that's more short to near term swings in the market. And we have a lot of clients who just love that. I love it myself. That's what gets me up in the morning. But again, answering your question, I'm maybe too long worded here. I think you got to be in the market overall. And we're going to get our negative periods, and if you're smart enough to trade out of some of that stuff, fine. But I think you got to take that more optimistic viewpoint, because of Christ, look what's been happened here between COVID and election scandals and criminality out there. Why is the market, like you say, 30,000? It makes no damn sense, but yet it's doing it.
Is the stock market signaling an economic recovery ahead?
It seems to be, sure. It's telling us that corporate earnings were held back quite a bit because of the COVID and because of all kinds of concerns have just been held back, and now it's rip roaring forward. So again, it depends what stocks you're in and what sector you're in, but it sure appears next year could see it's like, again, finding the right sector and the right group and where the earnings are all going, but it all seems to balance out. And there's also a little bit of manipulation out there too, the way they construct the indexes. For example, we just learned they're putting Tesla into the S&P 500. You start putting big high volatile stocks in there that make big moves and can continue higher. That's going to distort the indices even more and make them a lot stronger than they may normally have been. So if you can always stick high flying winning stocks into your indexes, that sort of covers any underlying weakness that might have occurred elsewhere. So that's sort of an interesting phenomenon. Over the years, we've seen the big boys, stick the high-flying, big, high-performing, point-making stocks into the indexes, and they continue to do it. So with Tesla going in, that's going to help the S&P regardless.
With massive money printing, are interest rates likely to move higher?
I'm actually a little more concerned about the interest rate phenomenon. I think we discussed this on a previous interview, I do think interest rates are going to go up, and they've been upticking here a little bit in our chart. So yeah, I don't think the zero low rate situation is going to stay around very long. So I think a little pressure will start to be seen, has already started to be seen in some of the interest rates. I'm not a super bear, but I think rates are going to uptick.
We'll have more with Mark Leibovit when we return on This Week in Money.
AMY Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Mark Leibovit. Mark, the U.S. dollar is at the lowest it's been since early 2018. What do you see ahead for the greenback?
I'm sort of neutral on the greenback. It's flirting around with its lows. It looks oversold. Looks like it needs to rally. It's not rallying. There have been a lot of reasons to think that it should have come out of this and experienced a nice technical bounce. It didn't. You would think that with all the money printing and spending that is forthcoming, that would weaken the dollar more. Perhaps it might. I'm taking sort of a neutral stance on it. But what I thought was sort of interesting is the fact that the dollar was as weak as it has been, but gold really didn't go up, and everybody was betting on that inverse relationship. So, this is why I don't like tying markets together and looking at them independently. But to answer your question about the dollar, I think it's real oversold. It should rally technically, but it's not doing it. So I guess until proven otherwise, I'm neutral on it. And the logic of it being weak because of the spending is a good one. But there may be too many bears around with the dollar. So I'm sort of just watching it carefully and actually waiting to see if we get some type of buy signal in it, because it is so oversold and everybody is so bearish on it.
Gold just put in an outside month to the downside. Could this be an indicator of what's ahead for gold?
There's a big picture comment that I made before in my newsletter and on these radio broadcasts, and I don't know if it's going to apply or not. First of all, short term, our work turned a little negative here in August, and it looked like we were going to get a pullback, and there's some seasonal tendency for maybe a low in mid-December. I mentioned this earlier, and then a rally into the first quarter. But I have an old friend of mine, Terry Laundrie, who passed away a few years ago. He created this technique called the Magic T back in 2000. He told me at that time in his cyclical work that we're going to see a big high in gold in 2020, and that was a long way away. And here we got to 2020, even though we had this correction from 2011 down to 2016, we did come back to a new high. And part of me says, could we have seen a major bull trap here where everybody got caught again like they did back in 2011? So it's too early to tell, but that's sort of in the back of my mind. Everybody's so convinced that gold's got to go to, 3,000, 5,000, 10,000, and there are a lot of all these fundamental reasons why supposedly it should. And we have seen Bitcoin take off and people looking for alternate places for their money, but for some reason gold sort of underperformed here the last few months. So I'm going to trade it. I'm a little biased to the long side since I was looking for low by mid-December and a tradable bottom. But outside of that, part of me says don't think that that big bull market is ahead. It may not be until we start taking out those highs again and we get some strong technical confirmation. You got to be trading it and keep in mind that the best could have been behind us. I'm probably the only one out there saying it, but that's something you got to keep in mind because it is a possibility.
Is gold likely to see new all-time highs in 2021?
To answer your question, I don't know. I don't know right now. I would say if you're going to see a chance of it, it would occur between now and February and March of next year. If it doesn't, then it may be over for gold for a while.
Silver also put in an outside month to the downside. Is silver likely to move with gold going forward?
Yes, they should. They should track together, though some feel silver could outperform it because it's so relatively cheap compared to gold. I would bet on a play like ticker symbol CEF, which used to be the old Canadian Central Fund, where it combines half gold, half silver, so you're sort of diversified a little bit. So if gold goes, silver should go too.
Gold hit new all-time highs in 2020, but silver didn't. Could silver surpass its all-time highs of $50 in the new year?
Again, I don't know, Jim. I'm going to wait and see how gold acts here after it takes off and we have a little bit of a trading bottom. And if it does, then we'll have to see it go through that $29 to $30 level and make a call at that point. Right now, I don't know. I'm just watching it, but hoping for a tradable rally.
Is the gold-silver ratio likely to continue in a trading range?
Yes, I would say so, continuing to do that. Uh-huh.
Bitcoin's around $20,000. Where's it going to go to from here?
A lot of movement towards cryptocurrency. That's a lot. Big play, but I think the governments are going to get involved. I don't know whether I would hold the Bitcoin or the big names. I think they've had a bit of a play here. I think they got overdone. I think there's a lot of concern on the part of the central banks and the governments that Bitcoin is stealing the action. So you might find, as I think we saw in China recently, where the government steps in and says, no more cryptos. You got to do ours or nobody else's. So I think you got to be careful about getting too excited about the cryptocurrencies, though they are, like anything else, they're tradable, and trade them accordingly, and they could certainly be part of your portfolio as a little bit of a hedge, but I would not, they're certainly in the future, but my question is, will they be government controlled or will they stay independent as they are now, and the bigger question is, can the government really take it away from the private sector, as we're reading some plans may be in the works.
Crude's been on a move higher. Is this move likely to continue?
Yes, crude oil is looking better here. Just when everybody thought it was going to zero and the electronic lithium-powered cars were taking over, crude oil is starting to come back to life here. Perhaps there's something brewing in the Mideast, maybe an Iranian conflict of some sort, but the chart started to improve, and some of the oil shares, particularly a couple of the index shares that we have on our recommended list, have been upticking. So I would say crude oil next target's around that $50 to $55 area, and we'll take it from there.
How are the agricultural markets doing?
They have been doing better. There's been a little volatility in a couple of the sectors, I think corn in particular, but there's a lot of speculation regarding potential food shortages for all kinds of reasons coming this next year. So that's been, and some of it have to do with delivery issues with agricultural products. So I'm bullish on the agricultural sector, and some more than others, but I think holding a ETF in agriculture makes a lot of sense.
Are you bullish on marijuana stocks?
On a tradable basis, yes, more the U.S. names than the Canadian names, though some are starting to come back a little bit. So we have a bill in front of the U.S. House, which apparently got passed, but there's some question whether legalization from the U.S. Senate will occur or not. And that may be irrelevant, since some companies are doing well financially regardless. So I don't think it's important whether it's legalized or not. I think some companies that are benefiting anyway. So I would say yes, the horse is out of the barn, and nothing's going to stop the growth in the cannabis industry. Alcohol is out there. They tried to bar it in the 1920s. Cannabis is on the move. A lot of medical reasons why it should continue to be developed and promulgated. So I'm overall positive in trading those names.
Do you follow the metals used in electric vehicle batteries?
Lithium's been doing terrific. There's a few lithium stocks out there, palladium as well as metals related to that industry, even nickel. So all the metals related to the electronic cars definitely are in play.
Are there sectors that will benefit from an end to the lockdowns and the coronavirus scare?
There are, and I wish I had a list in front of me here. I don't, so we'll have to catch that on the another interview. But I would say for sure you're seeing sectors like cannabis doing well. You're seeing infrastructure doing well, so somebody's going to be spending money no matter who's in the White House. And electronic vehicles are benefiting, as we just discussed, for their own reasons. So it may or may not be related to COVID.
Do you think we're in for a significant tax loss season?
I don't think so. We have seen it already. Here we are into December, and I don't see a lot of selling, so I don't think so.
Have these volatile markets been good for trading?
Absolutely. We love it. We love the volatility. That's what keeps us going. If it wasn't volatility, I would have fallen asleep at the wheel every day, Jim. This is the horses out of the gate every morning, and we love it. Yes, definitely. We will continue to see it, and hopefully we'll continue to see it.
Do you enter some trades with a short-term plan and others with a long-term plan?
This goes back to a statement I made a few minutes ago. You got to keep a part of your stuff long-term and a part of it trading, and you've got to be diversified, not only in the markets. So you've got to be all over the place. You got to have some private investments in businesses, companies that are away from the market. You got to be in real estate. You got to be in gold and silver. You got to be in stocks. You got to be in some type of bonds, and maybe perhaps some types of annuities. You got to be well diversified, and you might have to have a little bit of a trader in you too to realize that there are times when things get a little overdone in each of these sectors that you take a little bit of money off the table and just watch for another opportunity.
Warren Buffett said he made his billions because he only invested in things he understood. Is that important to have at least an interest in what you're investing in?
Yeah, I think so. You got to enjoy it. It's got to be fun for you. I got excited about just about every stock or sector I get involved with. It's because I saw something that excited me about that industry or that company. In the last few years, I love the solar stocks, for example, because I just saw it as a practical solution. And man, I remember way back, it's before my lifetime, but even back in the 1930s and 40s, people were having solar. So it seemed like its time was due again, and it made a lot of sense. And that just got me all excited about that particular industry. So that's it. Got to just like what you're doing. Cannabis is another example that made a lot of sense. It was sort of fun. So if you find something that's fun and exciting, get a real feel for it, you can do a little chart reading and look at the charts and see if you're buying it too high or too low, or it has some momentum and you think you can make some more money doing it, then more power to you. Go do it. That's what we do every day, you know.
Mark, can you remind people again about your special offer?
Sure. At vrtrader.com. vrtrader.com. We have a 50% off special, 2020 half off, 2020 half off, and you get 50% off of any subscription for any time frame that you had signed up for. And thank you again for mentioning it.
Mark, thank you for being on This Week in Money.
Thank you, Jim. Thanks for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. Coming up, Chris Vermeulen, next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Chris Vermeulen from thetechnicaltraders.com. Welcome back to This Week in Money, Chris.
Yeah, thanks for having me back on the show, Jim.
Chris, before we get rolling, can you tell us a bit about the Technical Traders?
Sure. Well, Technical Traders is pretty much what it is. I'm a technical trader. There's a few of us here, and all we do is follow price action. And we trade the markets on different time frames, from long-term couch potato investing all the way down to momentum intraday trading using the price charts. And that's how we use cycles and Fibonacci extensions and retracements, all kinds of technical things that give us insight of where the trend is headed next and how far each move should be, so we can play the waves that repeat on a monthly basis in the stock market. So that's what we do at a very high level, and every day and every week and month is a new kind of scenario. So it's always ever changing and it's fresh. I love it.
Chris, the Dow hit 30,000 points. Are you seeing any indications in the charts of where the Dow is likely headed?
Yeah, well, the Dow, it's been really nice to see the Dow, the transportation index, and the Russell 2000, which are the small cap stocks. They're all performing really well in the last month and a half, and they're actually having those lead the way is actually a sign that this market is very convinced and money is flowing back into the stock market, just like we're starting a new bull market. And while we could argue the other side of that, because I know the fundamentals aren't there, and this is a Fed-induced rally more or less, the key here is the price is up, the trend is up, money is flowing back into the sectors and the Dow, just like we're starting a new bull market. And this could have a lot of legs. Based on the March lows, the rally that we've seen up into September, and then this multi-month sideways pattern, what that is simply a cup and a handle pattern or a bull flag pattern. There's a few different things you could call it, and prices broken to the upside. The next upside targets are 32,000 and then 37,000 on the Dow. So there's a lot of potential upside still from where we are right now.
Gold just put in an outside month to the downside. Is this causing you to watch support levels?
Yeah, gold's definitely got a lot of people panicking. It's had a pretty decent pullback. The thing with gold here is, you and I actually talked about this back in August when they put in a really sharp pullback initially, and the technicals based on that pullback were saying that 1800 mark, give or take a little bit, is going to be a really critical level for gold to hold. And that was a long ways down from where gold was at that point. And people were like, no way, I don't want it to go down there. And it's too far. That's not good. But believe it or not, these lows that we've seen on the gold chart around the 1750, 1800 mark is very bullish. It's a very critical support zone from a technical standpoint. And this should be a bottom, and it should be an opportunity to get in for much higher prices. The next upside move for gold, we're actually looking around 2,400. If this does become a bottom, that's where we're headed next. So a lot of people are panicking, and that's a good thing. We want people to panic at support because that's when bottoms are made. The weak hands move out of it, fresh money moves and holds those positions and are willing to hold for a longer term, and that's what creates that bottom and a rally to the upside that follows.
Is gold's new high this year likely to be a short or long-term top?
Obviously, I don't think it's going to be broken this year. Not much time left, but I do think it's going to be broken again, and I think it'll happen early, probably the first 3 or 4 months of 2021. If this market finds a bottom here, the metals market, I think it'll be broken very quickly. And 2,400 again is the next stop.
Gold hit an all-time high this year. Silver did not. Is silver's $30 top likely to be a short or long-term top?
I like silver a lot, and it's had a really nice chart pattern unfold. It's been holding up a lot better based on the technicals, the chart pattern, than gold has. And the other thing is we're seeing big money move into the silver miners, and they're actually outperforming the rest of the precious metals market in terms of gold, silver, and gold miners. So there's people moving into the leveraged silver players, the silver stocks, and that usually means we're going to see the physical metal silver rally as well. So there's a lot of upside potential with silver. I think we could see this continue to run and potentially go all the way up to around the 39 level. But that's going to be a pretty big stretch from where we are, but the charts are pointing to that potentially in the next 3 to 6 months.
Silver also just put in an outside month to the downside. Does this look like it could be bullish or bearish for silver?
Yeah, these outside bars, these red bars that kind of engulf the previous bar and then close lower, they definitely bring awareness up. I mean, it's got everyone who owns precious metals and miners with their warning antenna up, and so we're paying very close attention because it does have the potential of breaking down here. It has a bit of a bearish undertone, but when we look at the rest of the patterns that are unfolding here, this is still actually a very strong, this is the first pullback in a new bull market for silver. The first pullback is usually one of the best opportunities to get into something. And so while people are panicking out here because they're looking too short term, the big trends at play as this is the first pause and pullback to get in if you missed that breakout earlier this year from 18 up to 30 more or less. This is the time where you could get positioned again, and we could see that next run up to 33 and then up to about $39, $40.
In the even bigger picture, silver has put in an outside year. So far, it's to the upside. Is an outside year a strong indicator in the charts?
Yeah, looking at the chart, I mean, this outside year bar on silver is a huge breakout. I mean, it's a very bullish sign. It means prices should go higher. But the thing is, a lot of the big bull market runs in precious metals really they happen in kind of 1 year. It's usually like an 8-month huge rally and big move, and then it can fizzle out within a 1 or 2 year period. So it's already had a nice move. Again, it's having its first pullback right now. This yearly chart, very bullish. We should see price continue to move higher in 2021, but it doesn't mean this is going to last for many years. We could see this market get overbought sometime next year if we have a lot of chaos in the financial system. We'll see metals and those things spike up, and they could put in a big peak like we saw in 2011. And then eventually fizzle out. But yes, it's a very bullish sign, and we're going to close the year with a very strong candle on the yearly basis.
How are the miners' indexes looking in comparison to the price of the bullion?
Yeah, the gold miners they all have a very similar chart pattern in that they've all rallied very nicely in a controlled way from the March lows. They've all been tapering down and sideways since really the August high that the precious metals sector went in. And they're forming a bullish pattern. Now, a lot of people are getting shaken out of gold in gold miners because they've pulled back more than people thought they should. Really, from a technical standpoint, it's still extremely bullish. They're testing support levels, so this is actually a really good level in the sand here and on the charts for gold and the miners to go much higher. Now, again, out of the miners, we are seeing the best asset within the miner sector are the silver miner juniors. Those ones seem to be holding up the best. They seem to have some of the biggest money piling into them, and I think they're going to be the big leaders. If you look at an ETF like SILJ, that's the silver miner juniors, and from where it closed today, it's showing that potentially we have a 73% upside move to where the next full measured move would be. So there's a lot of upside potential in the silver miners, more so than the gold miners.
Within the next couple of weeks, could gold and silver drop enough to trigger a strong tax loss season in the stocks?
Yeah, it could. The market always has a way of kind of flushing things out. I prefer it not, just because we're at a really critical support level. If it does start to break this level, it's going to create a big landslide. You could call it a tax selling kind of slide, but really, if it breaks this level, it's naturally, it doesn't matter what time of year it is, it's going to create a huge wave of selling to the downside, and that is going to be a massive washout low. So there is that downside risk. Again, those outside bars are bearish on the monthly charts, and if we break the lows that we saw earlier in late November, we could see a big downward move, and people would take that drop as tax losses. And so we'll have to see how that plays out. At this point, the metals are holding up, and they're looking like they're starting to bounce. But again, we want to follow price, really not so much try to predict it. And we need to see, I'm focusing more so on silver and the silver miners, because that is where the big money seems to be rotating in, and that's where the most upside is at this point.
What's happening with platinum and palladium?
Platinum's got a really interesting story, and on Friday alone, platinum took off about 3.4% to the upside. And if somebody was to take, say, the monthly chart of platinum and zoom out several years, you can see that it's been basing. It's been trading sideways, trying to put a bottom in for many years, and this week or this month, it's actually breaking out of a basing pattern. And when something breaks out of a multi-year basing pattern like platinum, we tend to see a multi-bar rally, and it could last several months. So platinum here is on what looks to be a breakout this month. Now, we're early in this month. It could still easily reverse and close below this level. We're only 5 days in. But platinum has got a lot of upside. And when we saw gold break out of its multi-year basing pattern, it rallied hundreds of dollars. Silver had a huge pop this year when it broke its basing pattern, and now platinum is just starting to break it as of Friday. So it's a really exciting metal. A lot of people aren't talking about it, which means it's not a crowded trade. There's not many people there right now. So I think it's got some potential here to pick up the slack for gold and silver if they're going to kind of flounder for a bit.
We'll have more with Chris Vermeulen when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, the U.S. dollar has been dropping since March. How do the charts look for the U.S. dollar?
Yeah, the U.S. dollar chart, when you look at the monthly chart and then look all the way back to, say, 1997 or so, we've got a really bearish pattern on the dollar. It's actually breaking down this month from a bear flag pattern, very similar to what happened at the end of 2002. And back in 2002, we actually saw a very similar market condition in terms of a super cycle that started to top out where everyone was in real estate, everyone was in the stock market, and more so technology. And that's what's really happened in 2019 and 20 this year. It's that same type of play. And now we're seeing the dollar break down almost an identical pattern to 2002. And that's what sparked a huge move in commodity sector, especially precious metals. And so that looks like it's starting to happen right now. And it bodes really well for gold and silver pulling back and testing support here, because if the dollar does continue this slide, it's going to, I think, fuel metals much higher from this really strong support level. And we're going to see a multi-month run up in metals to hit those upper targets that I mentioned earlier. So I'm really excited about where metals are headed. And the dollar is a big part of that. As it shows this bearish pattern and continues to slide to, potentially multi-year lows here soon.
So far this year, the U.S. dollar has put in an outside year to the downside. Is this likely to be signaling a bullish or bearish 2021 for the dollar?
Yeah, I think the dollar is pretty bearish. I think it'll perk up and put a bottom in if we start to see the stock market top out and we see potential another big wave of selling with COVID. It seems to be when there's fear in the market or in the global market, it seems people move to the reserve currency, which is the dollar. We tend to see it firm up and bounce. So that could happen again. But overall, I have a feeling the dollar is going to break the lows that we saw back in 2018. It's going to continue to slide here. And then when it does bounce, it's going to be nothing more than a bounce within a downtrend for the dollar. The dollar will still be in a downtrend, but it just finds a bit of a bid. People buy it up as they fear the financial system's collapsing and they want to move to the global reserve currency for safety, whether if it's that safe or not, that's up to you to decide. But overall, bearish on the dollar, and I think we're still going to see the dollar go a lot lower from where it is now.
How is the Canadian dollar holding up, and where is it likely headed?
Well, the Canadian dollar, the loonie's been on a tear. Obviously, it follows crude oil a lot, and crude oil has been moving up and up and up since that washout low in March when it went negative, and the Canadian dollar has been doing the same thing. It's actually very inverse of what the U.S. dollar is. It rallied up, formed a little bull flag sideways for a few months, and now it's breaking above that and starting to extend. So we are definitely seeing money rotate back into the Canadian dollar as the confidence builds up in it, as our main resource, oil, is rallying in price. We like to see those move together. So it's looking really strong here. I think it could continue to run to about the 82 cent level, and we'll see. It's got some headwinds up at those levels, but at this point, it's putting in a major low, a low from 2016. I think this is a very significant bottom for the Canadian dollar, and it could trade a lot higher looking forward several years from now.
Bitcoin peaked at around $20,000 3 years ago, December 17th, I believe. It's now back to around $20,000 again. How do the Bitcoin charts look?
Bitcoin is definitely struggling a little bit here at that 20,000 mark. It's kind of acting as a resistance area. Price had hit its head there before in 2018 and then completely collapsed all the way down to about 3,000 and change. And now we're back up to that level. And when you hit a previous high like that, it's naturally going to have a wave of sellers. And that's exactly what we saw. We got right up to that 20,000 level, and then we saw Bitcoin collapse about 15 or 20% in one day, more or less. So it had a very sharp pullback, and now it's back up, testing that 20,000 mark. But where we're at now is it's going to have to it's going to try to eat through that resistance level. There's a lot of people excited. Everyone's piling into Bitcoin. And the big question is, which way is it going to break from here? It's got to break these recent highs from really just this week, around the 20,350. That's the high, down to the low somewhere around the 16,700 range. So look at that range, that high and that low, and when it breaks to the upside of that, we're looking at like 32,000, 37,000 upside target. If it breaks below that lower channel, we're going back to 14,000 very quickly. So right now, to me, it's in a high risk, high volatility, potential top phase, and whichever way it breaks out of this sideways range is going to have a very big move. Could be very profitable, could be very painful for those who just kind of sit there and don't protect their asset.
How are the charts looking for crude?
The crude oil chart looks really good. It's been moving up and up and up, and it's broken to multi-month highs this month. And the upside move, I mean, we're looking for a potential move for it to go all the way somewhere up to around $63 a barrel. There's a lot of volatility in crude, and while it seems like a pretty extreme target, back in 2019 we were talking about $32 crude oil, which sounded extreme as well back then, but that's what the charts were pointing to in the long-term charts. And we ended up going well below 32, obviously, this year. And now these charts are pointing to the 63 level. So they're marching higher. Energy sector stocks are on fire. They're one of the strongest kind of rebounds in the last month and a half or so. And so usually we see big money move into the leveraged plays of a commodity, like the stocks, the explorers, exploration oil stocks, and then you see the commodity kind of follow suit and kind of grind its way higher. And that's what we're seeing in silver as well, and it's happening in the energy sector. So still a very bullish picture here for crude oil.
How's natural gas looking?
Natural gas is kind of all over the place. It's a tough one to trade the way it moves. Overall, it had a really nice run this year, but it's got some really noisy charts, tough to trade. There's a lot of mixed signals, and it's a tough one to trade because there aren't any good ETFs or ETNs that follow the price of natural gas for somebody who wants to trade it. In the last month and a half, all the ETFs for natural gas are moving down and lower. Meanwhile, the commodity itself are going up and higher. So it's just a real mess to trade it. Now, naturally, we've had a nice run into fall, into the winter here, which seasonality-wise is good for natural gas. But we're at the point now where that excitement of cold weather coming, people moving into natural gas, is actually kind of finished. And we're seeing, now we should see actually weakness in natural gas go into the end of the year, which falls in line with the short-term trend. It's down right now for natural gas.
Do crude and natural gas tend to have seasonalities?
They do. They're both a little bit different. Crude oil actually tends to rally from, if you go back over the last 20 years or so, crude oil naturally wants to rally about the second week of December and then rally right into the end of the year. Where natural gas is the opposite. It tends to top out this time of the year and sell off into the end of the year. So they both definitely have seasonality movements. Natural gas is lower from here or sideways, and crude oil we're actually looking for an upward move. So the crude definitely has the upper hand at this point. The stocks are moving, outperforming oil. Oil's in a strong uptrend. Seasonality-wise, it's saying, hey, this is also a good time to get into oil. It favors people buying into that energy.
What are you seeing for interest rates and the bond market?
Yeah, the bond market and interest rates, they're definitely a tough one to figure out. I mean, I think rates are going to stay low for a very long time. Obviously, the Fed can't raise rates. It'll completely annihilate everyone who's got debt. We've got more debt than ever. If they raise the rates, the banks will go under more or less as well. It's not going to work. So we've got low rates. I think the only way bonds are really going to start to move and squeeze is when we start to see real fear in the stock market. And if we see another big bout of selling in stocks, I think people are still going to pile into the bond market and we could see them rally up. And I'm keeping a very close eye on bonds because we've actually been seeing a lot of volume moving into bonds, bond futures the last month or so. And the price action is becoming very unstable. It's starting to poke above the 50-day moving average and then sell back down. And the key with bonds is you want to be above that 50-day moving average, and that means it's favoring higher prices, and it's favoring overall strength over a 2.5 month period. And if we see that again, which I think we are, it's going to be a very similar setup in the bond market as we saw in January 2020 this year, where they start to break above the 50-day after a multi-month consolidation, and they start a new big rally to the upside, which means we're going to see some type of event happen early this 2021 that's going to spark fear. And so that shift is starting to happen right now, but we're not there yet. But keep your eyes open for bonds to go parabolic and have a huge rally here over the next couple of months as some type of event, black swan, kind of unfolds in early 2021.
Is charting an art or a science?
Yeah, I think it's a mix of both. You really do need experience. You got to get a feel for it. It's very visual. You kind of get a feel for emotions and how things move. But it's, there's statistical analysis. There's all kinds of different things at play. And that's what I like about technical analysis is I like things to be, rule-based, that you can follow a strategy and you can run the numbers and you can put the odds on your side and manage risk and positions. So to me, it used to be more art. When I got into trading, I loved the charts. It was all fruity and colorful and you trade patterns and stuff. But now that I've been trading for 25 years, it's more of a science. You're building out systems. You're using rules and statistical analysis and cycle analysis, hard things that you can identify and manage positions. So it's definitely a bit of both. But as you kind of mature as a trader, I think you start to go more to the science side and build systems and robots and mechanical strategies that have proven to work over time.
When you look at a market or stock, what are you looking for that would make you a potential buyer?
Right, so when I'm looking at whether it's a stock or a sector, and I use a strategy called the BAN strategy, which stands for Best Asset Now. It's something I just kind of coined because it's proven. If you read like Jack Schwagert's, any of his books with interviews, all those top traders around the world, I mean, they all have a lot of things in common where you don't need a ton of positions. 5, 7, 12 positions is really all you need to be fully diversified. Based on all those different professionals. The one thing they all have in common is they constantly are looking for the best asset now to trade, to put your money into. And so that's what I look for, whether it's in an individual stock or a sector. Which sector is the leading sector showing signs of performance, signs of money flowing in, cycle-wise, cycle and trends are in its favor. And when you find that hot sector that is either already outperforming or just starting to outperform the stock indexes themselves, that's when you can zoom into like the stocks within that sector and find those stocks that move dramatically. For example, this year we saw the TAN and clean energy, solar and clean energy stocks, just that whole sector ETF, they both moved about 270% from the March lows. Huge rally. But which is awesome, but when you zoom in, you go and you look at the best stocks within those sectors, a lot of those stocks move 800, 1200, 1800%, these individual stocks. So that's what I'm always looking for, is what is the best asset now? And I look for 3, 4, or 5 plays, and then I get into them, and then you're diversified. They'll never double up on the same sector. So if gold miners are looking like the best and silver miners, are the best. You have to pick one. I don't ever want to, put too much in one basket. You definitely want to make sure anytime you get into the market, your money's in different pockets. So you want to look for the top 3, 4, or 5 best assets and then spread your wealth and let them kind of mature, because some of them are going to be huge, other ones will be average, but you should end up beating the market dramatically in the end.
Where can people follow you and find out more about your subscription service?
Sure. Yeah, if you go to thetechnicaltraders.com, there we've got multiple services ranging from really passive investing signals for your IRA or for your RSP account if you're Canadian, or any type of long-term portfolio you have. We give signals on the stock market, when to be in, when to be out, and what are the best asset sectors for that position. And then we also break it down into shorter term. We've got the Technical Traders newsletter for people who are more active, who want to swing trade. And that video report, we come out every morning before the opening bell, and we walk you through what happened yesterday, what's happening in pre-market today, and how we think the markets are going to move. And then we can analyze and enter trades based on that. And then we've got some other kind of mix. We've got an options service to trade as well, and then a position trading where we just trade the indexes. The average trade is about a month and a half long. So we've got a real variety of trading strategies, and you learn while you more or less earn. And so that's the great thing about the video services. Every morning we get emails of people saying, wow, I didn't know how you looked at that, or now I get why you do that, and they understand some of our little tricks and trading methods that they can implement on their own, and then they get to follow our lead with trades that we issue as well. So it's really educational. We got a free blog full of ideas that you can follow every other day. We pretty much post a new piece of content to share.
Chris, thank you so much for being on This Week in Money.
Hey, thanks, Jim. Always a pleasure. Anytime.
My guest has been Chris Vermeulen from thetechnicaltraders.com, and that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Mark Leibovit, and Chris Vermeulen. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@housestreet.com. Now stand by for a company showcase update from American Manganese CEO Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. My guest is Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Always good. Great to be on the show, Jim.
Some great news coming out of the office this week.
Yeah, we had a press release on December the 1st, Monday, or Tuesday, and we got 99.7% extraction of the lithium-ion battery material on a continuous operation basis at the pilot plant, and that is excellent. That's very close to 100% extraction of the cathode materials. And we also talked a little bit about our precursor precipitation reactor, which we'd received, and we're getting ready to fire that up and hook it into the system here very quickly. So that's all great news. And you have to remember that the objective of the company is to provide what the battery manufacturer wants, not necessarily what we want. We could have designed a plant and everything that would have turned out precursor material, but if it wasn't in what the battery manufacturers wanted, we would get the commodity price only. The final product can be worth several times what the price of the commodity is trading at. So that's something to go after, and we've always kept that sort of option within our site, and after we do this work, we can start our work on the final design and estimation of the final estimation of the cost of the commercial plant. So it's all working very well. We've been slowed down by COVID, and but that is, we're still advancing regardless of that. We've managed to circumvent several areas by being proactive, and so we're maybe not on schedule, but we're getting there. And I'm starting to see a lot of interest in the recycling area, which is very bullish for us. I mean, we strive to provide what the battery manufacturer wants, and I think that'll pay big dividends at the end of the day. So we've been successful. Cametco is very tuned into the battery space, and so that certainly helps in our R&D. And Joy is a professor at the Shanghai University and the resident battery expert, and certainly Cametco's battery expert. So we're well connected in that regard. We've had an interesting month. Last month, we've, there's been a lot of things that have happened and been very positive for the company. We now have our foot in the door on manganese operations in the U.S. with the Wendon stockpile. And if they proceed with the, incentives that they're talking about, we could be back at a Tillery peak in a year. And, that's a guaranteed source of manganese. Our process for that, of course, is patented and 4 different countries, and it puts us a little step ahead in the U.S. when it comes to treating low grades of manganese or mixed grades of manganese, which are difficult metallurgically, and so we're pretty happy with the way things are going, Jim. It's we put out press releases that should have banged the stock up, but I don't have to explain why it didn't happen. And today is an interesting day in the market. We've traded about 10,000 shares on the venture exchange and 125,000 in the U.S. Now, I'm not sure what that means. What I'm hoping is it's not that stock is being arbitraged. And but that's a big possibility. But we're busy in here, and we're still doing several NDAs a month with some of the best-known EV car manufacturers out there. And so there's an interest in what we're doing, and eventually that will gel into some kind of an action, and which will be very good. So it's a great month, I should say, right from the beginning of November. We had a lot of work going on. We had to complete a private placement. We had other things that had to be completed. We had to submit a plan for the sampling of the Wendon stockpile, which has been done. And we will be out there hopefully this month to get that started and done. So things are moving along, and we have certainly got a lot of interest from emails from not only NDAs with battery manufacturers, people interested in getting into the space of recycling, and I'm not sure that they are aware that if they want to license it from us, that's fine. They can build their own plant, and but we're going to be focused on building a plant in North America that will treat scrap material, which there seems to be plentiful, and that's the easiest route for us to go, and the low-hanging fruits. So
Larry, for people new to American Manganese, what's the company all about?
Well, American Manganese is a critical metals company that started out in the mining. It's taken its patented process for manganese, and that's the cornerstone of our patented process for recycling. And we have 2 patents on that, and so that's been very beneficial to the company. You can get all the information you want and do your due diligence on AmericanManganeseInc.com. You can contact the company at LREAUGH@AMYMN.com, and or you can phone at 778-574-4444. The company is traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYMN, and we're traded in Frankfurt under the symbol 2AM.
Larry, thank you so much for the update.
You're very welcome, Jim.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on December 4th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.